So we are now going to discuss the first three items in the CMA data. So we already discussed that the first item in CMA is sale. So sale is actually broken down into or rather the entries related to sale are broken into three separate items. So one is the gross sales minus excise duty, and then we arrive at what is known as net sales. When you're given a balance sheet, a P&L account and a balance sheet of the company. So we learned that we are going to convert this into what is known as the CMA format, right? A company gives its printed annual report, P&L balance sheet, and we are going to convert it into CMA format. So we'll take each item appearing in the P&L, right, and convert it into a operating statement in CMA data. In the CMA data, the first three items are gross sales, right? Gross sales, excise duty, and net sales. Net sales is anyway formula driven. Once you enter gross sales and excise duty, you'll automatically get net sales, because net sales is nothing but the difference between gross sales and excise duty. So in this segment, or rather in this sub segment, we are going to discuss about gross sales, excise duty, and net sales. As per government rules, right, companies have to pay something called excise duty. Okay, this is a form of tax, right? Even though it is called excise duty, it's also referred to as excise tax. Basically, it's a tax imposed by the government on goods that are produced within the country, right? So the sales we have discussed so far is the gross sales. So gross sales is without any deductions. So we made a sale to a company, right? And we billed. In the invoice we mentioned some amount, and that is the amount we receive from the company. So that is the gross sales. This is without any deductions, right? This is the amount without any deductions. That's the gross sales. Now our companies have to pay something called excise duty on the goods manufactured, right? So this goes to the government and not to the company. So this is not an income to the company. So since P&L account, we are tracking the income and expenses, right, in relation to the company, and finally we arrive at the profit. So this is income accruing to the company, expenses, and the resultant profit. So we have to speak of only income to the company, not to the government. So even though the company made gross sales, since excise duty is deducted and it goes to the government, we have to account only for we are more interested in net sales rather than gross sales. So excise duty goes to the government and not the company. So from a company point of view, what matters is the net sales, not the gross sales, right? Because if the government tomorrow increases the excise duty, company has to forego some of the revenue. So gross sales minus excise duty is the net sales. This is the first formula of a book, and it's a very simple formula, right? Net sales is gross sales minus excise duty. So we have already seen the concept of sales, right? Sales is nothing but the amount we are billing to the customer. Now what is this excise duty? Let's go into a bit deep into excise duty. So excise duty, sometimes also called as excise tax, right? This term is more popular, excise duty. It's actually a type of tax charged on the goods produced within the country. Why we are saying within the country? Because if the goods are produced outside the country, the companies pay what is known as custom duty. So that's a different duty imposed on the goods that are produced outside the country. For the goods produced in the country, we impose what is known as excise duty, right? So excise duty is a tax that is on the production or sale of a good. This tax is actually known as VAT, right? And who has to pay this? The company, right? The manufacturer who produces the goods will be liable to pay the excise duty. Now the point that you have to remember is no excisable goods. There are some goods that are exempted from excise duty, but the goods which are liable to pay excise duty, those excisable goods on which duty is payable shall not be removed. This is as per the directions of the government. So no excisable goods on which any duty is payable shall be removed. They cannot be removed unless without payment of duty. So unless the duty is paid, they cannot be removed. Removed doesn't mean just sale, right? Even if you make a sale or transfer to a depot or cap to consumption, transfer to another unit of your same company, or even free distribution. So whatever it is, excise duty is to be paid. Is the point clear? If a good is liable, it's coming under the purview of excise duty. It cannot be removed. Removed in the sense not just sale. All these come under removal, right? The good cannot be removed without payment of duty. You cannot remove the good, right? So excise duty is a statutory obligation of the company. So since the company has to pay excise duty, we are interested in the amount that is less gross sales, less excise duty. So net sales is what we are interested in, because this is the income that is coming to the company. So in the CMA data, under the operating statement, right, There's something called balance sheet which will come later, right? Currently in the operating statement of CMA data, the first item you see is the gross sales, right? Sometimes this is broken down into two heads, that is the domestic sales and export sales. This provides further information to the bankers. Then we go to subtract excise duty, and what we finally arrive is known as the net sales, right? This is what we'll actually see in the CMA data. So when a P&L account is given to you, right, in a P&L account of a company is given to you, and you are converting that P&L account into a CMA data operating statement, you have to cull these figures. These figures have to be drawn, extracted from the P&L account. So you go to the corresponding pages where this information is provided, and you enter in the CMA data. So gross sales is directly available. This breakup is sometimes available in the main page or the schedules or notes to accounts. You can get this information somewhere. Excise duty is provided in the P&L account itself. So, and net sales is also provided in the company, or you can link it to the formula, right? So we'll see how a blank format CMA looks like in this category. So in the CMA data, I have seen the first three items, right? Gross sales, excise duty, and net sales. So under this gross sales one, there's sometimes two items, that is the export sales and the domestic sales. This is the further information to the bankers. Then there is something called non-operating income, right? P&L, we told it lists the income and the expenses. You'll find a lot of expenses items. Expenses items are many, but actually when it comes to the income, the broad category of income, you have only two categories. One is the operating income, and another is the non-operating income, right? What is operating income? Operating income is income that is coming from the core activity of the company. So a steel manufacturer, the primary business of the steel manufacturer is to manufacture steel. So any income that is coming from the sale of steel and related activities like sale of byproducts of generated during the process, that will be a core activity of the company. Non-operating, we have already discussed. It is something which is not the main activity of the company. So income from interest on fixed deposits and things like that. We are going to see a lot more examples in the coming slide. Let us take a example of a real life company. We are now going to see Wipro's balance sheet, right? Wipro's profit and loss account for the year 2011-12. So this is extracted. This information is extracted from the P&L account of Wipro, an IT major of India, right? And this is the P&L account, how it looks like. So this is Wipro's P&L account for the year 2011-12. This is directly taken from Wipro's P&L account for the year 2011-12. So we can see the items which we already discussed. We have discussed the gross sales, less excise duty, and net sales. There's something called other income, which is nothing but the non-operating income. So what you're going to do is, whenever you get a balance sheet like this, when a P&L account or balance sheet like this, what you're going to do, we are going to have a CMA data like this. We'll have the gross sales, less excise duty, net sales, and we have a lot of other expenses. Finally, we have something called non-operating income. This is what the CMA format looks like. What we are going to do is, we're going to go through each and every item like this. We'll take when you're presented with a P&L account or balance sheet of a company and you have to analyze it. What you do first of all, you have to convert it into the CMA format. So you go through each and every item. Revenue from operations gross, so put it under gross, 318034. Excise 1205, put it here. And net sales get automatically populated because it's Excel sheet linked by formula. This non-operating income 12274, you put it on the relevant head. Please note that 12274 further breakup is provided in schedule 25. If you see the schedule 25, further income is this other income. The breakup is given. So this is a dividend of mutual funds, profit on sale of investments, debt instruments, exchange fluctuations. So there are a lot of breakup provided, right? But we are not interested in the individual breakup. In CMA data, we already discussed it's a condensed and abridged format. So what we are interested in the overall figure of non-operating income. So we straight away dump that figure under the non-operating income. Please note that CMA data can be modified in the sense that the format is not sacrosanct, right? Can modify. So if there is some major item in non-operating income which you want to highlight, so you can add some extra rows under non-operating income, right? So this is, if you see the profit from sale of fixed assets is very high, you want to highlight it, we can have an additional row and then club it all other income, all others, and for example, see the 6296 interest on debt instruments. If you want to highlight this, you're going to specifically mention that 6296 and then others. This is 12274 minus 6296. You can all club under others. You can do that, right? Non-operate this CMA data can have the flexibility because it's just about inserting new rows. You can do that, but usually you club all non-operating income under one single head provided in the CMA data form. please note that this non-operating income items which we discussed for Wipro might change for another company. This is the breakup of non-operating income for one company, Wipro. So Wipro had these particular items: dividend on mutual funds, profit on sale of investments, interest on debt instruments, exchange difference, and other income. So for another company, there can be some other non-operating income like rent income. Rent income is something which companies who have this land and building and have given on rent can earn income. That is a rent income. Then profit on sale of machinery. That can be there. So there are many items. So what you have to understand is whatever might be the type of non-operating income, what we basically concerned is the total value. We're not concerned with the individual balance sheet, because in CMA data what we are basically interested in what is the operating income and what is the non-operating income, sales and non-operating income. Basically these are the two major income heads we are interested in. So what we'll do now is list down some 39 items. These are the most common items you can appear in any balance sheet. You take any P&L account, the items mentioned under sales and under the head of non-operating income you should find in this particular list. You're not going to find all this. I'm not saying you're going to find all this, but maybe 2 or 3 here and 3 or 4 here you'll find in this comprehensive list. So what we're going to do is we're going to take the all possible items that can appear in under the head of income and non-operating income and see where you have to classify it. Please remember, in CMA format we are only concerned with whether it's a direct income or a non-operating income. So all we have to do for these 39 items is just identify whether it's a direct income or a indirect income. So these are all the items which you are going to ever come across in a typical P&L account. So under the head of either sales, that is a direct sales, or non-operating income, the items which you're going to come across will fall under any of these 39 categories. Usually, very rarely you'll find an item that is not in this list, right? So now you have to know where to classify this, whether you have to classify it under the gross sales or whether you have to classify under the non-operating income, right? So we're going to go through each and every of this item right now. So most commonly you're going to see an item called sales in their P&L account of a company. So when it's not mentioned whether it's gross sales or net sales, you can directly put it on the net sales. That you can do. Sometimes what companies do is they will deduct that excise duty and directly present the net sales figure in the P&L account. So you can directly take that figure whenever you see just an amount called sales, you can put it on the net sales in the CMA data. So this item, where it's going to appear in the operating statement of CMA data and the head of net sales, right? However, if you have specifically given gross sales, you're going to put in on gross sales, right? So sometimes sales is also mentioned as revenue from operations, as we have seen in the case of Wipro. So some companies use this term revenue from operations. This is nothing but the sales. So you can put it on the gross sales, right? If you're given net sales, you're going to put it on the net sales. Then sometimes you're going to see these items: closing stock of work in progress, closing stock of finished goods, accretion of stock. These are not actually income, but if you're given a P&L account of a company, it might look like this. So here you're going to give in one column they're going to give list out all expense items, income items, and all expense items in another column. So here they might say sales, and something they may say closing stock of finished goods. So you might be thinking this is an income. This is not actually income. This is just listed under the income side. Actually, this is credit and this is debit. That is the most correct definition. So you're going to find under the credit side an item called closing stock of work in progress, closing stock of finished goods, right? Accretion of stock. Whenever you find these items, please note that this is not an actual income item, but it's correct to place them under the credit head, as you're going to see in a later chapter. For the moment, we are not going to discuss this, right? We are going to discuss it in the coming sections. At the appropriate time, we are going to discuss it. Please note that though it appears under the income column, it's actually not an income, it's an adjustment, which you're going to do later. Then there's something called exceptional income. So whenever you hear the word exceptional income, it means it's a one-time income. This is not a regular income. So exceptional income is also you'll put it on the non-operating income. All these are non-operating income. See, excess provision for income tax written back. So earlier period you had provided. We are going to discuss an item called provision for tax. So this might not make sense for you right now, but we're going to deal with it in a subsequent segment in this very chapter 5 itself. But you provide for tax, right? I don't want to burden you with the provision for tax right now, but you make a provision for tax because you don't know what is the exact tax amount you're going to pay. So you actually make a provision. So it might happen that you have provided excess rather than the actual tax to be paid. Why this happens, I'm going to explain to you later. But if that case happens, when you have provided, when you have made provision for an amount more than the actual tax amount, then you can write it back in the next year. So that excess provision written back for income tax will be a non-operating income, because it's nothing to do with the core activity of the company, right? So all these written back, sundry balances written back, provision for deferred tax written back, doubtful debts written back, any provision written back, right? So all these things put in the non-operating income, right? Of course, sometimes directly non-operating income is given, you can put it on the non-operating income. So this reversal of claims, other income, rent income, we have discussed, rental income on leased assets, foreign exchange gains. See, these all these items, this foreign exchange gain, for example, to the change in exchange rate fluctuation, there might be some income which the company has made, but again, this is not the core activity of the company, right? Just because the exchange rate has varied, you had made a profit, so this is not a core income. You can put it on the non-operating income. So the items on valuation changes, right? Mark-to-market gain, forward options contract, valuation gain, derivative hedging instruments, and all these things, and also all the profit items, profit on sale of fixed assets, profit on sale of investments, mutual funds, right? Profit on sale of shares. These are investments basically, right? So when you sell them and made a profit, you can show it under the non-operating income. Again, this is not the core activity of the company. So again, interest income, interest on FD, interest on bonds, all interest items will also be coming under non-operating income. If you see an item called cash discount received, so what actually this means is, sometimes when we purchase raw materials, the supplier will be giving you a discount. So when you purchase 100, maybe he offered the material only at 95. So that 5 rupees is actually a discount. So sometimes the P&L account shows this under the income head like discount received, but actually this is not an income. The better way to do is, say for example the purchase is 200. So what you do is, a better way is to deduct that amount. For example, this 5 rupees, deduct this 5 and show 195. Right? You can show on the purchases side 200 and discount receipt 5. This is also correct, or net it off and directly show 195. This is actually makes more sense, right? This is because not actually an income, right? You can say it's an income, but actually it is a netting figure, right? So adjust in the purchase income, right? Just in the purchases. So all your dividend income from mutual funds, dividend investment, all these are non-operating incomes. So for the process of our exercise, we are going to take the P&L account and balance sheet of real life company and translate that into CMA data. So for this exercise of P&L account, we are going to take the example of Maruti Suzuki for the year 2011-12. These figures are actually extracted directly from the balance sheet of P&L account and balance sheet of Maruti Suzuki. So this is how the P&L account of Maruti Suzuki for the year ended 31st March 2012 looked like. So what we're going to do is, we're going to take this entire P&L account and convert it into a CMA format. So by the end of this exercise, you're going to see how a completed operating statement of CMA data looks like, and then we'll go on to the balance sheet, right? The font is a bit small here, but don't worry, we are going to extract each and every the relevant section and then going to zoom up, right? For example, this particular revenue from operations, we are going to extract it separately and zoom it up, so you're going to have a better idea. This is the extract from the revenue side. See here, the items that are listed on the income side are gross sales, less excise duty, net sales, and other operating income. There is something called other income. The difference between other operating revenue and other income is, this is a core activity of the company. This is not a core activity, right? So we spoke of earlier in the example of a steel manufacturing company, it can have the income directly from steel products, sale of steel manufacture, and selling of steel, or sale of traded goods. The company can buy already manufactured steel and just sell it without any processing. So that is a sale of traded goods. You can do that, right? So that is also an operating income. Non-operating is totally different. It's not related to the main activity of the company. For this example, Maruti Suzuki had the following items for revenue. So the company has made a income of 364 million, right? We have also already discussed in an earlier segment that it's very important to read these schedules because they provide further breakup. In this example, you're not going to do that, but I'm going to tell you what actually this contains. Schedule 24 actually, the gross sales breakup provides the breakup of vehicles and spare parts for Maruti Suzuki. So these are the two main income earning products for the company. Vehicles, of course, is the main product. Spare parts is also a very big business. So this schedule gives the breakup between the vehicles and spare parts, right? So the schedule 25, other operating revenue, provides breakup of income from services, sale of scrap. So Maruti Suzuki also have a lot of service centers. So this is not sale, this is service. So income is also earned from this service centers. So now you can make the distinction between revenue and other operating revenue. Both are operating, but this is a minor activity. This is the major activity, right? So vehicles for Maruti Suzuki is a major activity. Service and sale of scrap and all this are also a core activity, but it's not a major. This doesn't form a major form. For example, right? For example, if you see this, if you compare this amount 386,141 with 8812, this is a small. This is a small amount, but this is still a core activity, right? And this other income is the non-operating income. So schedule 26 will provide further breakup. So it will have for this company we have interest from bonds, income tax refund, dividend income, gain on sale of investment, provision return back, and all these items we will be having. So now that we have seen what Maruti Suzuki's P&L looks like, we'll see where each item goes into the CMA data. So gross sales obviously goes to the gross sales, right? Excise duty we have a separate entry for this. We can put it in the excise duty. Net sales of course gets automatically populated. Other operating revenue, CMA data does provide for a separate entry for other operational income. That means the gross sales and other operating income it provides, but usually companies add up. You can do that. You can put it on the gross sales. So 386,141 plus this 8812 you can directly put in the single, and this other income of course goes to the non-operating income. So gross sales for Maruti Suzuki, the gross sales item will be putting on the head of gross sales, right? We are going to put it entirely under domestic sales, but Maruti Suzuki usually does have exports. If this breakup is available, right? If this is available, so it will be definitely be available somewhere in the schedules. I have not taken it, but while you are actually dealing with the real life company, right? When you're dealing with your proposals, advance proposal, when you have the information, just break it out in between export sales and domestic sales, because CMA has the provision. CMA provides this provision between the breakup of domestic sales and export sales, right? So I'm going to put this amount on the gross sales in the same data. Let's excise duty directly we put into the entry of excise duty. Net sales of the product we no need to enter it. This is formula driven. Other operating income amount, actually CMA does the original CMA format does not have the provision for other operating revenue, but sometimes people are adding an additional row to, because this is again an important item to highlight what is this other operating income. People are adding it. You can do it, or sometimes banks actually some banks, I mean not all banks, but they provide an additional line. Some are not showing, so it's your choice. You can directly add it under the gross sales, or you can show it as a separate line. Other income you're going to put in the non-operating income. So please note that what we have achieved by this process. So we have taken the entries from the P&L account of Maruti Suzuki and put it under the CMA data. So what we have achieved in the process? So we have achieved something called, we have condensed the P&L account. If you see the individual items, right? If you see the individual items appearing, there are 2 items appearing in the gross sales, that is the vehicles and spares. There are 4 items appearing in the operating revenue, that is that sale of the service income, sale of scrap and other. The 4 items under that heading. And the other income, there are total 12 items. So the totally 18 items pertain to revenue. But what we are doing, we are putting all this directly into 2 heads. One is the sales, gross sales, right? Other is the non-operating income. So by directly we're providing only two heads for this 18 items. So already we have achieved a condensation of 16 items. So this is what CMA does. It actually simplifies the actual data into succinct data. This is this simplified format, this condensed format is more useful for bankers for their analysis. That's what we're going to do as we go forward. So let us open the blank format for CMA data and put these entries, the revenue items for Maruti Suzuki, into the CMA data. The first item we are going to take is the gross sales, and this amount is 386,141. So this figure I'm going to put into the CMA data under the head of gross sales. So under the head of domestic sales, 386,141, right? So under the head of, see here, domestic sales, I'm putting that entire amount. This is the gross income. The breakup between domestic sales and export sales is something which I'm not considering right now, but if the information is available, you can enter that information. So I'm assuming this entire sales is the domestic sales, and I have put this amount under the gross sales for the year 2011-12, right? What usually banks do is they deal with either lakhs or crores. So this figure for Maruti Suzuki is actually in millions. So we can convert this into either crores or lakhs as per our convenience. Usually for major accounts, banks follow crores as the unit of measurement. So we can convert this into crores. So when we convert into crores, this is what we get, right? 38,614.1 crores. This is the gross sales. So the next item is the excise duty. This we can directly dump it under the row of excise duty, 39082. So 39082, right? But this is in millions, so we can convert it into crores. So 3908.2 crores is the excise duty. Please see that as soon as we entered the gross sales, right, the gross sales and the excise duty, this figure net sales has been automatically populated because this is formula driven. If you see the formula, it is C27 minus C28. C27 is the subtotal of domestic sales and excise sales, that is 38614. C28 is the excise duty. So this is formula driven. So once you enter domestic sales and excise duty, you will automatically get the net sales, right? So these three items are already accounted for in the P&L. Gross sales less excise duty, net sales due to formula, it's already picked up. There's something called other operating revenue. So what we're going to do is we're going to club it under the row of gross sales. So 8812 we are going to put it under gross sales. So let us add to the gross sales. So this is a addition. So in Excel you have to start with an is equal to. So is equal to 881.2 crores, right? This is the excise. This is the other operating income. We have put it under the domestic sales, right? So when you enter, you'll get the total domestic sales. That is this is the total of the sale of vehicles and spares, and this is the service fee, sales and sale of scrap and other related other operational income, right? So this is the total income, this is the excise duty, and this is the net sales. You can see this net sales, which is formula driven, tallies with the figure which is available in the actual P&L account, 35587. So 35587, right? So we have completed till here. So this other income, this is nothing but the non-operating income, 8268. We are going to put it directly under the non-operating income. This breakup is available in schedule 26, but we are not concerned with the individual breakup. So this total of 8268 we are going to put under the non-operating income of CMA data. So the non-operating income is not actually available directly under this gross income, because this is all operational income. So you have to go a bit down. You need to go into you have to cross all the expenses, and finally after the expenses you're going to find somewhere non-operating income. Please note that, see here, see these items: other income, processing charges, miscellaneous income. So the CMA format, we can have provision for this other operating income which we discussed, right? For Maruti Suzuki, this service from income from service and sale of scrap can be entered in this other income. This is a core income, right? You can do that, or directly you can put it on the gross sales. It doesn't matter. So let us see the non-operating income. You have to go a bit down, okay? So we have to go all this manufacturing depreciation, right? Opening stock, work in progress, and all this, selling, general, interest, all expenses. Once you cross all expenses, then you'll have something called non-operating income. Here non-operating income is split into this is actually not a standard format. You can add rows based on your requirement. So usually you have interest received, prior period income, others. You can actually change them. For example, for your company, if prior period income is not there, if you want to highlight some other income from, or rather profit from, right? Profit from sale of shares. If you want to highlight this, you can do that, right? This varies from company to company. For this example, let us put the entire amount, right? 826.8, right? So this we are showing under interest received, but you can modify it under, since this is a single entry, you can, instead of putting under interest received, you can put it under others, 826.8. Doesn't matter, right? So we have entered the income items related to the Maruti Suzuki into the CMA data. So what do you have to actually do is go through the entire P&L account, take in each and every entry and put it under the relevant row of CMA data. We are going to do that for all the items appearing in the example of Maruti Suzuki. So with this we have come to the end of the segment related to sales. In the next segment we will start with another important item appearing in the operating statement in the P&L account, that is the raw material, right? We'll see you there.